Inflation data came in favorably last week. We saw the 10-year yield drop, and mortgage rates were coming in the mid to high 6% range, depending on your situation. And that's a lot of good news for home buyers and home sellers. I'll explain exactly what that means in a second. If you like what you hear, you get some value out of this, make sure to subscribe to the channel. You can hit the bell for notifications. And if you want to schedule a call with our team about these lower rates and potentially lower monthly payments and how that could impact your real estate plans over the next 6 to 12 months, make sure to do that with a link in the comments to schedule a call. So anytime you see inflation data beat the expectation, which is exactly what happened for the month of April, inflation came in at 0.3% higher than where it was in the month of March, which was 0.1% less than the expectation, and came in 3.4% year over year, which is in line with expectations. So we're seeing about 3.5%, a little less than that. The market will react favorably. So it wasn't as hot as what we saw in the first quarter. And then the results were the 10-year yield came down into the 4.3 to 4.4% range, down from approaching 4.5%. And then we saw mortgage rates drop. Locally, we saw quotes as low as 6.5%, and that may be like the perfect scenario where you've got strong income, excellent credit score, a great debt-to-income ratio. But we saw rates dip below 7 for the first time in a few weeks, and really the first time in the month of May. So all of that translates into positives for people that are thinking about buying or selling. So to give a perspective here, there's a 91% chance that the Federal Reserve is going to keep rates the same at their next meeting in a little over 20 days. And there's expectations now from people that predict these things that we might see 2 rate cuts later in the year. We're not going to see anything at the next meeting. I'm not expecting the Fed to do anything dramatic. This is all second half of the year expectations that should be happening. What we also know is that this is the 6-week low for mortgage rates. So we've seen affordability jump back up. We also saw that inventory has grown locally 7.2% compared to the same time last year. So we're seeing more homes on the market. We're seeing affordability and rates come down. And this is a great opportunity for the folks that want to make a move. So if you're a seller considering maybe putting your home on the market, inventory is growing, rates and affordability has just come down, I'd be careful trying to gamble and say I'm going to wait until next year when prices continue to rise, because we're seeing that inventory is starting to climb. You look at places like Florida, Arizona, the Carolinas, Texas, they're seeing massive increases in inventory. We're not seeing the same thing here in Pennsylvania. Inventory for the whole state is up 6.7% year over year, so it's not insignificant. And because of this, there's some signs that we're going to see inventory continue to grow, maybe eventually get past those 2020 levels. We're seeing that rates are settling in right now. It's still a little volatile, but again, good news with inflation coming down and being in line with expectations. So that, to me, might get some of the people that have been pausing, waiting to see what's going to happen with the economy, get them back into the market with that 6 handle on mortgage rates. So if you're one of those folks, you're someone that's thinking about selling and you've got a place to go, I wouldn't be playing the waiting game like a lot of other folks are. I'd start to get an idea what's going to happen locally in my segment of the market, and that could be your town, your township, your school district. I'd be looking at what's happening with homes in my price range, because the premium market and the high-end market, the luxury market, operates a lot differently than the move-up market or the first-time buyer market. So you want to evaluate all those local intricacies in your market, and I'd be talking to people exactly about that. Then the flip side is, if you're just looking to buy, well, rates just came down. There's no indication prices are going to be going down. I'd be looking at how can I lock in a lower rate. Time on market is also rising right now. We've seen time on markets going from maybe about less than 3 weeks. It was in that like 16, 17-day range for parts of last year. Now we're closer to a month in the suburban markets. In Philadelphia, it's a bit higher. That gives you an opportunity to go in, write an offer, and if something's been sitting on the market 10, 14 days and you're liking it, go in and take a look at the home, and don't be afraid to get something on paper. There's still homes selling competitively. That's not the case. We've seen multiple offer situations constantly, but there's opportunity out there. And it's all the more reason to schedule a call with someone with the link in the comments from our team that knows how to navigate these national market conditions and translate them to what's going on in your local market. Use the link, get in touch with somebody, because this stuff is changing all the time and there's now opportunity in the market you want to be able to take advantage of.